Good morning, everyone. It's Gail with Traders Help Desk, and I just wanted to show you, and this really kind of highlights why I like trading the new Nadex Touch Brackets. And yesterday, which is actually this bar that was forming, um, we actually had what's called a flash crash. Now, for those of you that do not know what a flash crash is, it's a bar that violently moves down. And in this case, the USD, JPY, and all of the yen currencies moved down dramatically. The USD JPY actually moved down 474 pips. Now, a lot of people will think, oh man, I could have made a lot of money on that. This is what happens in the spot forex market. When you get a move like this bar yesterday, as fast as that started moving, they increased the pip spread. A great example was the Bree exit. They increased the pip spread to 150 pips. That means you're going to pay 150 pips to get into the market and 150 pips to get out of the market. But more importantly, it also causes a lot of stop outs. For example, on this bar yesterday, if you didn't have a 200 or 300 pip stop, you probably got stopped out. So you didn't realize this potential move. There's been a lot of complaints from yesterday saying that brokers shut down trading. So you couldn't get out down here at this move. They didn't open it back up until it got to about 107. But again, they increased that pip spread, so you would have been stopped out. And there are complaints on all of the forex forums because of that happening. Now, with the Nadex Touch Brackets, you don't have to worry about that. Okay, so for example, right now you can see this is 7, 8, 11, and 12. Okay, these are the touch brackets. Yesterday they had even more touch brackets available. These opened actually after the move. Okay, so in this case I've highlighted one where you have 109.91. That's the top of the touch bracket, and the bottom of the touch bracket is 107.41. Now, here's the really cool thing about the touch brackets. If you had went into this and say, let's say you paid $100. Not saying that you did, but for example, if you had entered this one and it was $100 for entry, well, it moved down to 107.41, touched it, and you were out of your trade. So that would have been a really nice trade, almost 150 pips, okay? They did open other ones that you could have entered yesterday. There were additional ones that you could have entered, but in this case, you're not paying a pip spread. You pay your risk on entry, okay? If it is touched, then you are out of the trade. So for example, let's say we had a flash crash to the upside and you were short here at 109.91. If you touched this, you would have been out of the trade. Okay, so it works in both ways, not only for profit, but also for loss. And you can see all of the news today is about the flash crash. It did it on the Aussie yen, the British pound yen, the euro yen, the USD yen. They all suffered the same flash crash. And one way to protect yourself against those is by using the touch brackets, which are now available in the Nadex platform. And they're pretty simple to trade. For example, this is your 109.91 area, okay? And it on December 31st, which was Monday, you could have entered that probably for about $30, okay? And this is based on, you have a bias to the short side. Now, if you did on Monday, if you entered this short on Monday, then you were able to capture the full width of that touch bracket. Okay, so if you had entered Monday, let's say you had a $30 risk that you paid on entry, and it moved down here and it touched 107.41, that would have been a $219 gain. Remember, trading the touch brackets are like trading a mini forex account without having to pay that pip spread or be exposed to potential stop runs, which again, that's why I love these touch brackets. You would have had a risk to reward of about 1 to 4 on that. And again, that's based on you entering on Monday with the touch bracket. They are linear, meaning they move with the underlying instrument. In this case, the underlying instrument is the USD JPY. And as this moves down, so does the touch bracket. So for example, right now it's trading at 107.57. So if you come over here and look, it's at 107.58. There's about a pip difference here. Okay, just really easy. Well, now it's trading at 58. So you can see there's no difference in this price, and it makes it really, really good to limit your risk and not have to worry about your trade for the week, because you cannot lose more than what you paid on entry. There's no pip spreads to worry about. They don't increase the pip spread to increase your cost. Instead, you pay the exchange fee, and then you can take advantage of these big moves, especially from the higher time frames.